Hey, it's Jeff Garber, mortgage interest rate guru, loan officer, mortgage expert, all that fun stuff. I want to give you an interest rate update for the week of Monday, April 26th. And let me get myself out of the way and we will start right now. All right, so what you are looking at is the bond market. More specifically, mortgage bonds or mortgage-backed securities that trade in the bond market Monday through Friday. And this is where mortgage rates come from. And this is what we watch to determine what is going to happen with our rate sheets. So, as I've said from week to week, from January through the present time, it's been a nasty sell-off, and as bonds sell off or go down in price like you're seeing here, mortgage rates go up. All right, in English, if you're looking at this chart, all you need to care about is green is a good day, red is a bad day. We want to start seeing more greens. Now, here we are today. We've been flirting with green, red, going back and forth, but if you look over the last couple days, you can see that the bond market, our mortgage bonds have bounced off of this floor and are starting to make a little bit of a run up. And if that continues, mortgage rates will actually start to come down. And you haven't heard that in a long time. But we've seen this before a couple weeks back. There's been a couple head fakes. So we want to see if we can get an established pattern, or if anything, I would love to see it even go sideways for a while. If we could just get some stability and we can relax and not keep worrying about rates going up and up and up. Now, why do mortgage rates go up? Well, let me pull myself back up here. Inflation is the main catalyst for mortgage rates rising right now. Inflation is the kryptonite to the bond market. And as everybody knows, we're seeing inflation at some of its hottest numbers since the 80s. And we need to get ahead of that right now. So how does that happen? Well, that's where the Federal Reserve comes in. Now, the Federal Reserve, they control what are called short-term rates, not long-term mortgage rates. All right, you really need to know the difference, because a lot of people think that when the Fed raises short-term rates, that mortgage rates are going to go up with them. Now, in the beginning of a Fed rate hike cycle, we may not see mortgage rates come down yet, but typically we will. Why? Because the Fed is raising short-term rates to pull money out of the economy, makes things more expensive, and when that happens, inflation starts to stabilize and then it comes down. Well, when inflation comes down, guess what comes down right along with them? Mortgage rates. All right. So, knowing that the Fed is probably going to hike rates the next 3 meetings for sure, which would be one in June, one in July, and one in August. Every 6 weeks they meet. We are expecting 3 rate hikes for short-term rates. Now, if the bond market believes that these rate hikes are going to help inflation, then we may start to see a turnaround in the bond market. And not only will we stabilize, but we could see rates slowly start to come down. Now, how long might this take? We're not sure. We have to see what the Fed says, what they do, and what happens each and every day with other news that comes out that could affect the bond market. All right. So in the short term, we've already had the big uptick in rates. Not the end of the world. All right. Again, rates are in the 5s right now. As a disclaimer, that is not a rate quote. If you would like a rate quote, you need to speak with me and I can give you an official rate quote. Right now, I'm just using this as a number just to give you an idea of what's going on. Now, as I said, rates are in the 5s right now. Not the end of the world. Okay. The second part of what I want to talk about is the media. The media, every report that comes out, the media spins this and they create fear. And fear keeps people on the sidelines. And my definition of fear is false evidence appearing real. FEAR. Learned that a while back. Always stuck with me. So false evidence appearing real. And what they do on the networks is they take a report that just came out and they only give you the information on that number. They don't look backwards. They don't see what revisions were made. They don't look back a year. They don't do anything but say, hey, this is what's going on right now. Housing is terrible. I got news for you. It is not terrible. Housing is alive. Appreciation is still there. All right. Unfortunately, we still have inventory issues. And when it comes to that, that just means you need a good strategy. All right. You need a good strategy to win the offer in 2020 and 2022. And what do I do for that? Well, I call it the smart pre-approval. So what we're doing is we're not only pre-approving our clients the normal way, the way that we're accustomed to doing it, where we have a nice conversation, we collect your income, we look at your assets, we look at your credit, we run your loan through automated underwriting systems, and at the end of this, we come out with what's called an official pre-approval. We answer all your questions, we give you some numbers, we report back to your realtor, tell them all the good news, and then boom, you go out and look for a house, find a house, you come back, you ask us for a pre-approval letter, we customize it, and then you put your offer in. But unfortunately, that's only half the battle, right? We need to add strategy to the pre-approvals today, right? We need to discuss bid over ask. What does it mean when we have to go over the asking price? How much do we need to go over? Does that make sense? We can show you all of this information so you're not flying blind. All right. What happens if the property doesn't appraise and we have to deal with an appraisal gap? So what we do is what we call a smart pre-approval. All right. We're going to do all the stuff I just mentioned on the first part of it. Then we're going to have a strategy session. We're going to loop your realtor in, get their advice, and we're going to put together a bulletproof strategy to help you win the offer in this market. And I think that's very important. We're seeing success with that, and that's what everybody needs to do. It starts with having a good loan officer. You need a good realtor. You need everybody to be on the same page. That is a big key right now. So I hope this helps. I'm excited. This is one of the first weeks that I'm able to tell you that the bond market is in our favor, and we might see a little bit of a rebound. I'm gonna have to keep an eye on this the rest of the week. I look forward to bringing you an update next week where we'll see if the momentum is in our favor or if it was another head fake. That said, I also have a YouTube page. It's called www.mortgageinstructionmanual.com. And mortgages don't come with an instruction manual, and I want to be that instruction manual for you. So on my YouTube page, I put these daily interest rate update videos. I will have loan program updates on there. I have information about money, the foundations of money, and how money works. I have information on how to get pre-approved and what the smart pre-approval is and whatnot. So please check that out. You can leave a comment below. Reach out direct to me anytime for a free consult, and I look forward to catching up with you next week. Have a good one.